legal entities available, and so on. See the compliance and other operational issues. My voice is okay? Everybody hear me, right? Okay, so easiness of doing business in China. I mean, yes, you've been around for a while. As new you could be in the market, you understand that China has it's a very specific market. There are all sorts of bureaucracy. It's extremely complex. Language, culture. Well, this is a rank made by the World Bank. They take 185 economies, and you can see overall China stands 91, which is around middle of the rank. But well, it worth notice that starting a business, for example, is pretty low in the rank. Or well, paying taxes, for example, those are usually calculated. Well, first is comparatively with other countries, and they are often calculated in terms of the time it takes and the cost you might have. So somehow you can see, and somehow you can also see that things are not getting better since from last year. Paying tax, for example, lost 4 position. Well, the good thing is that if we compare China, for example, with the other BRICS, it's not that bad. Russia, for example, stands 120, or Brazil and India are 130 and 132. So somehow China was being like we cannot compare, of course, China with the U.S., which is 4th, I think, in this list, or in other maybe European countries, but somehow I think we this is a little bit like a half empty or half full glass. I think we're in a good somehow in a good position, at least, especially if you consider the opportunities that China offers. So where shall we start from? Well, doing this job for several years, it's very common to how can I say, have entrepreneurs or small, medium-sized company or even larger companies approaching the market, arriving, and okay, they want to do, but then somehow the approach is somehow has the bias of maybe coming from the West, where things are a little bit more clear than here. So a good exercise for like to understand whether this is the right place, whether what you want to do is feasible, and then eventually to understand the way to go. It's definitely to kind of try maybe a bit harder thing. What is it you want to do? China is extremely bureaucratic, as we'll see later, and somehow the government is gonna really ask you to tell what is it. Are you going to produce? Are you going to trade? Are you going to do service? If you're going to trade, what is it you're going to trade exactly? If you want to produce, is it polluting? For all of those steps, you will have to get authorization, you have to get permissions, you have to get at a local level, at a state level. So to identify the right entity is going to be key. The where China is a continent more than being a country. We will see later. I have a couple of slides on this. And then how. How means basically we'll also see whatever you want to establish in China is going to take you from 8 weeks to 12 months. This is going to take money. It's going to take resource. China is a difficult country. We said already. You come from Ecuador, but basically wherever you come from, it's somehow it's far. It's not just geographically far, it's culturally far. So you probably will need people on the ground. One of the biggest issue companies have in doing business in China is HR. Trust your people, people go, there's a huge turnover. So all those takes, of course, time to research, to find the right people, it takes money. So there's a problem of a budget as well. We'll see again better later what does it mean, and have some examples. So business strategy must follow legal structure. What does it mean? It means that after you will decide the way to go, somehow your strategy will have to adapt to the kind of business legal entity you will create. There are things you can do, there are things you cannot do. So if you choose to go for one or the other, this might or will define the model later. So we go back to the where. You can see this is just a, I mean, I'm not sure who has been around for a while or who's new, but most of those things you already probably know, but it's important to repeat sometime. China, we said, is like a continent, north, east, and south, or the coastal area, which are the most developed. Nowadays, I think we have something like 160 cities in China with more than 1 million people. Just to compare, Europe has 35 of those cities. So really, I don't know, we have, the last several years, we got more and more clients coming into China trying to sell wine. We can tell that somehow the ones that are doing a little bit better are the ones that are not maybe just limiting their sales to Shanghai, but maybe they go farther to Suzhou, Hangzhou, or maybe even farther, Nanjing, or in less known cities. If China really is the land of somehow opportunities, or if you really think it's 1.3 billion people might buy your product, you probably have to look at it not only at Beijing, Shanghai, Guangzhou, Shenzhen anymore, but probably also keep in mind that there is a lot more out there. But this is just also to give some visual. This map of China has countries of the world instead of the provinces, matching approximately the GDP of those countries. You can see, well, Jiangsu, for example, has a very similar GDP as Switzerland, or Fujian, Ireland, or Shanghai has a very similar GDP as Finland. Guangdong is very close to Indonesia. I mean, this is somehow to tell you where China is not a country. China is somehow, or comparatively speaking, is more like a continent. And we're not talking about the poor countries here, or at least there are a lot of rich countries, and this goes with I guess with opportunities. In terms of population, I think the most populous city in Ecuador is Guayaquil, right? And as you can see, as well as other cities like Milan, Vancouver, Atlanta, Sydney, they're really, I mean, below, nowadays we have Hangzhou or Suzhou, which more than 6 million people, and they're just an hour from here. So this, I think, that's enough for the background. And now what I would like to do is to describe or to go through the main legal entities you can register in China. I also left a slide for Hong Kong at the end. It's pretty common to ask about Hong Kong when you decide to enter China. There are pros and cons. We'll see what does it mean. So, well, a representative office. Representative office is usually the kind of entity that, is usually defined as the easiest and cheapest kind of entity when entering China. Is somehow, what a consultant somehow would advise you if you're not sure, if it's somehow temporary kind of step into the country, if you are new to the country. Well, there are pros and cons. Of course, first of all, a representative office is not going to be able to do real business. It's going to be a liaison office. What the foreign investor usually use a rep office for is to do market research, for example, if you want to sell, or to look for suppliers, or to liaise with clients. Maybe could be interesting in your case. A rep office can, for example, have a showroom. You may have a small office downtown and then have a little room where you have samples of what you want to sell. this is possible. But or do quality control if you are sourcing from China. The problem with the rep office is that you won't be able to do any invoicing, or it's going to be it's basically a cost center. It allows you to have an office to hire people, to get your visa or your resident permit for your people, so somehow to be in compliance in China. But if you close a deal, it's going to be between the Chinese maybe customer or the supplier and the headquarter, which could be in Ecuador or elsewhere. And then other limits are since 2010, a rep office can only have 4 foreigners, and the holding company must be at least 2 years old to register a representative office. Other downsides of rep office actually are tax. Tax is relatively expensive. As I mentioned before, a rep office is basically a cost center, which means that you will receive funds from abroad and pay your costs on a kind of regular when they happen. But how are you're going to be taxed? You're going to be taxed on the cost, on the sum of those costs. So you have rent to pay probably every month. You have salaries. You have expenses. Anything that goes declared under the representative office will be taxed, and the rate right now it's about 12%. It's actually a long formula that takes into account several different tax rates, and they're based on a deemed profit they think, the authority think you might have by doing your operation. You understand that if your costs are 10,000 US, you're going to pay 1,200 per month. It could be still fine. If your operation grow, we had in the past somehow clients or somehow offices or from the US or from maybe sourcing that approached us. They already reached something like they had a 600 square meters office. They had like 60 people. They were spending like hundreds of thousand of US per month to run the operation. If you pay 12% in tax, I guess it's a huge burden per year. And this is because you are taxed on cost. The alternative, like most of the case, is to be taxed on profit, which makes a huge difference. This situation got worse in 2010. Before that, it was tax burden was about 8%, a little bit less. So somehow this is. I mean, we still suggest a rep office when, for example, you have. I mean, what you need in maybe it's just 2 or 3 Chinese on the ground to do quality control or to search for suppliers for clients. You know that this is going to be somehow it's never going to grow, or somehow it's a stable sort of expense. So it become somehow it still keep being the best option you have. Or somehow if it has to be temporary. You want to try China, you want to try to promote your products, you want to do it for the next 2 years, why not to try with the rep offices if expenses are still under control? But if business start to grow, if you might need, I don't know, if your clients might ask you to invoice in renminbi, or if you might need to buy and sell in China, then probably this option is not the right one. We'll see later also other comparisons. So the second structure, which is probably, especially in the last 6-7 years, an entity that is 80% of the time utilized by foreigners investing in China, is what we call a WOFE. It's a wholly foreign-owned enterprise. This is, well, it's basically a limited liability company, 100% invested from abroad. Typical use, well, you can do basically anything in China now. You can produce, manufacture, processing, assembly, you can do service, you can trade, buy and sell, import, export, anything you come to your mind. The only limitation you might have might be related to some industries or some, well, where China is still sensitive, still regulates, where there is education or media, somehow considered well, national kind of security, so they might still be limited to investment from foreigners, or some industry where China still expect you to, or oblige you to utilize Chinese partner, like, I don't know, production of finished car. All the biggest brands that are producing in China, Toyota or Volkswagen, if they do finished car, they're probably doing it with a joint venture or with a Chinese partner. Advantages of a WUFI, of course, well, you have full decision process. You basically do what you want. You get the license. You can replicate what you're doing in other countries in China. You would hire people yourself. Issue invoice, as we said. You can buy, sell in renminbi. You can export. You have, you can, I don't know who's familiar with trading, but if, for example, you're buying in China and exporting, you also have the right to get back VAT, which is can also be interesting in certain cases. What are the disadvantages? As I mentioned at the beginning, the authority will ask you to define exactly what you want to do. If you are producing, you will have to go through environmental assessment. They will check whether you pollute water, whether you pollute air, and so on, and this will affect the registration process. They will ask you if you are exporting, importing, what are you planning to import and export. You have to register this with customs. If somehow the list or the definition is not that strict, but still, if your license says that you are import-exporting furnitures, they won't allow you to export seafood or agro products. The application process is relatively complicated, depending on what kind of entity you want, whether it's manufacturing, service, or trading. It's going to probably take you between 4 and 6 months. We are talking about dealing with between 9 and 14 governmental bodies, so it's a long process. Later I will show you a little chart. It's relatively difficult to operate in the sense that you probably need, if you do export, you probably need an export kind of person that has a license to export, or you probably need a cashier and an accountant, and somebody who run the operation. It's a bit different from a rep office, for example, where you can basically outsource most of the administration. And something we see very, very often is cash flow issue. China is relatively strict in terms of inflow and outflow of cash, of renminbi. So when you will apply for such kind of company, you probably have to give a feasibility report with defining what you plan to do and how much you plan to spend. So according to this, you will have a minimum registered capital to agree with the authorities, and well, somehow you better don't run out of cash if you stay to your capital too low, for example. We'll see later more about this as well. And then a joint venture. Joint venture, as we said, is when you have a Chinese partner. The registration process is similar to a WUFI, except that before starting, you probably have a memorandum of understanding to sign with your potential partner and a JV contract. So let's say it takes a little bit longer, especially because the negotiation part might take some time. Why do foreign investment go for a joint venture? Well, there might be several reasons. One, as we said before, could be a legal requirement. Want to do finished car, you need a 51% Chinese partner, or well, there are a couple of other industrials, although they're very few nowadays. Or maybe you are planning to sell in China. You know, well, you have a potential partner who can help you with the sales channels. So this could also be another reason why for investment go for a Chinese partner. Very common when sourcing from China. We had many clients in the past sourcing any sort of product. They have, I don't know, 10, 20 suppliers. Over time, they realize that quality is never the same. Timing is an issue. Somehow, maybe the Chinese supplier will put you on hold because he gets bigger number than your. So somehow this might affect the whole process, especially if you are sourcing from China to sell to an end customer, to somehow somebody else. This might really make your life extremely difficult. So what happened? Many have been looking for one of their best suppliers, maybe one small supplier, and you go for a joint venture. You offer the deal like 50-50, 60-40. You establish a joint venture. The Chinese side will keep doing what it's doing, but primarily for you. You maybe keep the selling channel in the US, in Europe, so you guarantee the Chinese side the sales. And this somehow, has been common, especially in Guangdong or also in the east of China, where production is often made, or anyway, when there is for investment, production is often made for export. In general, we suggest, however, to think twice if you really want to go for a joint venture. There are many bad stories. It's not always the fault of the Chinese, though. It's also like somehow, well, it could be related to different kind of goals you might have compared to your partner. It could be, of course, it could be culture. It could be language issue. However, it's how can I say? We see a lot of failures. We also have a few very good examples of series. But yeah, if you meet a potential joint venture partner, make sure maybe you do some background check. Those are all feasible. Could be anonymous. Could be just maybe checking the licenses, the public registered licenses. It could be a credit check. Make sure maybe that the potential partner never had the issue with the bank, for example, or never had lawsuit going on, maybe with somehow somebody in your same industry, so on. Or you might even consider asking to do a proper due diligence. Send two of your team, or maybe a couple of accountants or consultants, to have a look at the books and make sure that you're getting into something that makes sense for yourself and for the joint venture partner as well. So this is a chart. This is a chart for the incorporation of a WUFI. This is actually a trading WUFI, which is somehow in the middle between a manufacturing, which will take a little bit longer, and maybe a service that doesn't need some of those steps. As you can see, the process is relatively long. We're talking about 4 or 5 months here, from the name registration, and which is the first step, till starting operation, opening a bank account, and so on. As I mentioned before, between 9 and 14 different authorities. Well, you have to go to tax, local tax, national tax, customs, so on and so forth. this is a quick comparison between representative office, service company, trading company, manufacturing. Whether they, well, in terms of service, trading, and manufacturing, whether it's a WOFI or a joint venture, let's say the numbers you see here are very, very similar. Capital requirement, rep office doesn't need any. It's going to be founded every time it needs. Maybe you send 10, 20,000 US every month, every quarter, and the bank will exchange your US dollars into renminbi. You will pay your fees, your bills. Service, trading, manufacturing need capital injection. You have to commit with the authorities. There are some minimum to consider. Those that I wrote here, the minimum are for downtown Shanghai and most of the cities. Although there are a lot of exceptions, there could be exception even in districts. So talk about 300,000 renminbi for a service, 500,000 for trading, a million renminbi for manufacturing. As I said, this is the minimum from the authorities. It doesn't mean that, well, for example, it's going to be enough. Those can be utilized for as working capital till you reach break-even. So one of the aspects to be extremely careful is to make sure that those are enough to reach break-even. What else? Well, foreign staff, we mentioned before, rep office is a maximum of 4. Some cities have also less. Guangzhou, for example, only after the third hiring, they will not give you visa anymore. So this, in theory, it's to avoid misuse of representative office. It is, but there's been a lot of talk, especially in the Chinese press, about well, some nationalities using our representative office for illegal kind of immigration. So somehow they have their reasons. Well, invoicing, as we said, representative office cannot, can. Taxation on cost in case of ROs and on profit in that case. Registry timing, you can see, is relatively, well, interesting difference. Although of course you shouldn't decide which structure you go just because you say a month or two. Daily operation, in terms of a limited company, you understand that it's a bit more complex. Just a brief on tax. I think you will have day specific on tax, so I just want to touch. When you look especially on WOFIs and joint venture, so limited liability companies, we're talking on 25% on profit. You also might be affected by value-added tax. In services 6%, in the goods 17%. As we said before, when exporting, there is some refund. Well, business tax, this nowadays applies mostly on commission and very few other services. Not much. There's been a reform just last year on this. Then you have individual income tax on foreigners and Chinese alike, and dividend tax when you repatriate profit abroad. Well, I think this doesn't really interest. How are we for the time?
¿Qué hora es ahorita?
En
Ah,
son las 10.
we still have like 30 minutes.
So, other operational issue. Well, this is mostly related to the fact that, as we said, China is still very bureaucratic. They will, well, you will have, in terms of tax, for example, you will have monthly declaration to make. For some tax, you will have quarterly declaration to make. You have an annual audit to do, compulsory, between February and March. You will have internal review to do. You have several compliance to renew your license and so on. So it's going to take you time, and you will have to do it. There is no other options. Or if you're not in compliance, they might not renew your license. If you don't renew your license, you cannot basically operate. You cannot export, you cannot invoice, you cannot exchange the money. So that's to be taken into account. What else? Well, China has accounting principle, specific accounting principle, so there might be also some difference with your headquarter. Your CFO might be asking as this and as that. It might not be always easy. Well, we're still in a country which is developing fast. I know I'm saying things that you already know, I guess, but this also means that the regulations are changing extremely fast. We have, I don't know, the last 3 years we could tell about the reforms, and as we said before, in the rep office. We had change in corporate income tax in 2008. We had new labor law, also 2008. We had now the last year the reform of the VAT. Those are very big change, and they affect daily operation. Sometimes they even require a change in the business model. Those are all things well you will experience if you do business here. Foreign exchange control. This is also important. Renminbi is not freely exchangeable. If you bring luggage full of renminbi in Ecuador, nobody's going to exchange it for you. So this is there is this State Administration for Exchange. It's a specific body that look into the inflow and outflow of renminbi. So when money goes out, you have to explain why it goes out, and then the bank exchange it. When money goes in, same issue. Why it comes in, and the bank exchange it. This is somehow changing. Nowadays, some Hong Kong companies can have a renminbi account. There are some countries, some banks that are starting to operate in renminbi. It still doesn't work fully, especially for people doing business. So I would still keep an eye on this and make sure I understand how this works. Whether they want to admit it or not, although the rules on paper are the same, on the ground there's a big difference between Chinese companies and foreign companies. The level of scrutiny is a lot more. Foreign companies has to stay in compliance. Otherwise, risk rise, whether it's AIC, whether it's the PSP, the police, the amount of checks are somehow an issue. And this, of course, raises cost. Somehow, there are also a lot of talks with the business association trying to address the government on this. There is somehow a feeling of being treated in a different way between Chinese companies and foreign companies. Big example, try to establish a restaurant in Shanghai. It's going to take you forever. If you're Chinese, you open in 6 weeks, and nobody's going to check. If you try as a foreigner, as a foreign-owned food processing, it takes a lot longer. You won't be able to open your doors before you get everything. This is still a daily issue. Intellectual property, just a mention on this. If you are selling in China, actually even before you even think of selling in China, make sure you register your trademarks. Make sure very common newcomers to China go to a fair, finding that your products are already here somehow. So make sure, you, especially if you have brands or if you have trademark, make sure that is registered. And China and Hong Kong are different. So if you register China, Hong Kong, Macau, there are 3 different jurisdictions. well, a few words on Hong Kong. Well, most of the time when we have inquiries on China, Hong Kong often gets into the picture, or somehow there is always the question, so can I use Hong Kong, or how does Hong Kong work? Hong Kong is not China. One country, two system basically means that Hong Kong has its own legal system, its own tax system. Hong Kong, you have common law. Hong Kong ranks, for example, in easing of doing business every year first or second, compared to 91, which we saw before. In Hong Kong, it takes about 5 to 8 days to register a company. There is no such thing as a business scope. Company in Hong Kong can do trading on anything basically, or can do service, or can basically invoice on. There are a few things they cannot do, but I think most of the things that interest today here are feasible. You have only, in China we said between 9 and 14 authorities. In Hong Kong you have 2. The Inland Revenue Department and the Registry Bureau. Anyway, extremely easy. They talk to each other. In China they don't talk to each other. Compliance extremely easy. Actually, Hong Kong also allow you to register shelf company. Basically, you might even have simple, how can I say, office registered in a law firm or in a consulting firm, and the only requirement would be a company secretary, which is also provided usually, and you will have your bank account that you can open from anywhere in the world using internet banking, and that's it. We have an office with 400 companies registered in that office. I would say 30% are shelf, and the rest, some have office in Hong Kong, some are utilizing it for holding in China. Relatively inexpensive. You can consider the whole thing per year probably costs you $2,000-3,000 US, $4,000 US, depends on your operation, but it's extremely easy to quantify compared to something in China, where of course there might be ongoing kind of expenses. What else? Yeah, this is from the legal side. Tax relatively low, 16.5 if you actually, your profit is sourced in Hong Kong. If you don't have Hong Kong source profit, meaning that, for example, you're buying from China, you're selling to Ecuador, you're buying from Ecuador and selling to China. And at the end of the year, you can prove this, maybe showing contracts, or showing hotel rent, or showing maybe hotel bookings and so on. You can claim offshore status, and you might get full exemption on tax. There is no VAT, and there is no tax on dividend. So where do we use Hong Kong? Hong Kong for China, it's, for example, interesting when you, instead of having your partner in China, where it would take you time somehow to register, but also to change the structure of a joint venture. Hong Kong allows you to do this overnight. Basically, you need a couple of signatures. So the legal system is a lot more clear. So you might have more enforceable contracts or agreement than you might have in China. Hong Kong also has double tax agreement with China that allows you to save in dividend tax. It's repatriated from China to Hong Kong, it's 5%. Repatriating from China to most of the other countries is 10%. However, this, in this case, you will also have to prove that you have real business in Hong Kong. Holding company cannot just be shelf and just made for a tax purpose, or somehow at least you have risk that China complains about it. Why or other situation where you can use Hong Kong? Well, for trading. If you're basically buying from China and just to sell abroad, and you don't need to maybe invoice in RMB, or you don't need exporting yourself, Hong Kong could be a first step into starting doing your operation in Asia. I looked into the sectors most of you are involved with, and well, those are a few information we got. Well, I understand most of you are involved in agricultural products, wheat, corn, fresh milk, rapes, so on, cocoa, coffee beans. Well, you can see here, I will send you this presentation, by the way, so you can also, there are some restrictions, especially for wheat and corn. There are quotas, and the market somehow it's somehow monopolized by a state-owned enterprise. So it might take you, if the intention is to sell corn and wheat in China, they might be, this might not be that easy. You will see, we can look into this better, but to be able to import, you need some records, strong records, but from the previous year. But you understand that if you register, how do you get the records? So it's a bit the chicken and the egg. How do you import if you cannot get the license because you need strong records on import. Fresh milk, milk powder, rape, and vegetable oil had some quota in the past. They don't have any more, and they should be a relatively open sector. While cheese, chocolate, cocoa, coffee bean, avocado oil don't have restrictions. Travel agencies, I think there is also a representative of travel agencies. They are being involved in business of for Chinese tourists outbound is limited in China. You have to apply for specific license. There are some, for example, advantage if you are investing from Hong Kong, because Hong Kong and China have an agreement called CIPA, which give preferential kind of treatment. But again, this is something you need to look into, because they might ask you to be already, for example, doing this business for many years, track records and so on. You might know already there are some big players from Europe and the US. This one called the TU1, it's German. They got the license. There are like 3 companies that got the license, and this is mostly for it's a sort of government level. So the government right now doesn't seem to be interested in giving other licenses in this sector. I think that's it. As I said, that we can go for a Q&A. Just briefly mention, if you are interested in more material, Mary, my colleague, can tell you more. We have a monthly magazine on legal and tax. We have some guides on doing business in China, as well as India, Vietnam, and so on, if you're interested. And yeah, I think that's it.